The content on this channel is for informational and educational purposes only. Please contact a professional when it comes to your financial needs. In light of the recent Fed cut, do you think it's more likely that the companies will hire back employees that were laid off, or will they buy their own stock back? I'll give you two guesses, but the first one really won't count. Right here, right now on the Ujamaa Network. Let's talk about it. As a professional consumer, not a financial advisor, I look at trends, especially when it comes to me buying some things and where I buy my things from. Now, that said, there have been a couple of major boycotts recently. One is Target, and now what looks to be shaping up is a major boycott against Disney. But in truth, what does that mean for stock prices? The history recently has been that it is affecting the bottom lines to the tunes of billions of dollars. That is affecting stock prices. Now, with this 25% rate cut, what do you think is more likely to happen? And again, I'm only going to give you one shot at this. I think that the companies would be nuts not to buy their own stock back. They're going to have to, because they're going to have to bolster their bottom line and stop the bleeding. That's just what it is. Now, the overall reason for the rate cut, according to the Fed, was to kind of keep a tap on this softening job market. The job market was already cooked due to outside influences such as the tariffs and other things that's going on with automation and AI, especially in some of the major tech companies. Those jobs are not going to be coming back because of a 25% or 0.25% rate cut in borrowing. The reason or the rationale behind borrowing this kind of money at lower rates was to put back into your company. We saw this during COVID uh, when those announcements to try to spur job growth to get people back to work were made, that these cuts were actually going to help companies or have companies uh, be able to afford more job creation. It wasn't used for that. Companies blew their bottom lines up with increases in their stock prices, and things quickly got out of hand. I think that's going to happen here. And if we look at the charts over the past few years, you can see where I'm going with this. Bottom line, after a rate cut, there's a 14 to 24% increase in stock activity, stock purchases during the same time, and up to a year after the rate cuts, you're looking at increases in unemployment rates, or at the very least, no change at all, where it's not creating the jobs that they're supposed to be designed to create. This is a teller of what we're into. And this chart here demonstrates that it's pretty much going to be the next year going into it, where we're going to be looking at some prolonged unemployment rates and soft hiring. And that's before we factor in the thing that's causing the unemployment rate. So hold on to your hats. This is just some historic data that I am pulling up, and you might want to act accordingly. So now that you're armed with that information, what do you think is going to happen to companies like Meta, Google, and Microsoft, who laid off a lot of tech workers this year? Do you think they're going to reinvest into more employees after they just got rid of them? Not necessarily due to what's going on with the stock market or tariffs, but more to do with AI. Then you look at companies like Target and Disney, who are going through boycotts right now. Do you think it's more likely that they will hire more people? They didn't really necessarily top the bills at laying off a whole lot of people, but at the same time, their stock prices are in the toilet and only getting worse because of public perception of what's going on with their stances on certain issues. How do you think they counteract those billions of dollars lost with a 25% rate cut? Again, Arm yourself with this kind of information and act accordingly. Now, acting accordingly means to go ahead and dust off that Robinhood account and let's get into where you need to go to see where some of these companies are listed. Now, from your home screen in Robinhood, you don't even have to click on investing because you're already on the page. Scroll down and just let's take a look at those technology stocks. And what do you notice? All of the majors, Nvidia, Microsoft, Apple, Alphabet, which is your Google, they're all down. Amazon down, Meta down. But what happened today in the news about TikTok and who's going to be involved? Well, looky here, Oracle. Now, where did I hear that news from? Guys, you better be paying attention. Now, again, we're not any financial advisors here on this channel. I'm just a guy with a webcam and a couple of skills with a computer. But what I'm showing you is where to get the information. You act accordingly to what you're seeing. Whenever some news pops up and you hear it, something that you're seeing, you might want to act accordingly. I'm going to go ahead and do what I do, and I hope you do the same. Leave your comments below, and I will talk to you very, very soon.